Great. So as a continuation of what we introduced on Tuesday, that is topic number 6, I want us to now at least advance and look at opening work in progress and also closing work in progress. So what you need to put down, is if in a question we are not given, if in a question you are not given opening work in progress and the closing work in progress at the same time, then basically you'd be using what we call weighted average method. But if you're given opening work in progress, you are given closing work in progress, and of course you have percentage of completion, then definitely you are required to use the FIFO method. I hope all of us are conversant with these two methods, the FIFO method and the weighted average method. So under FIFO method, it is assumed that as you start production, whatever was not completed yesterday or last month will be completed first before we bring in new raw material and process it to a final product. Again, in this case, we will not assume that as you do the production, all the units that were produced or that were not completed, you brought in labor, you brought in material, you brought in overheads. No, there is that percentage which was not completed. So what you are going to complete is basically the remaining percentage. So question number 4B says, Bona Limited are the manufacturers of chemicals for use in agricultural farms. One of their products passes through two processes, that is process P and Q, before it is completed and taken to a warehouse. The following data relates to process Q for the month of March 2024. So the opening work in progress, we have 4,000 units, and we are given degree of completion and cost. So you can see direct material was fully provided, and therefore in the current period, this opening work in progress, no material cost will be charged on the opening work in progress. Direct labor was 60% complete. So in the current production process, we are only going to complete the remaining 40%. So as we charge the production cost, we charge 40% of the labor cost. Then overheads, we are having 60% complete. Only 40% will be completed during the current period. That is number 1. Number 2, the opening work in progress. You have to look at it from this point. Are we given a lump sum amount for the opening work in progress, or this amount has been distributed to each element of the production cost? What do I mean? In some questions, they will tell you opening work in progress has got a cost of 700,000, and that is it. But in this question, they have separated. So material, we are given 240,000, labor 140,000, overhead 72,000. If it is separated in that way, you distribute to the overheads or to the expenses under production. If you are given a lump sum figure, the entire amount relates to direct material. If you are given a lump sum figure, the entire amount relates to direct material. For example, if you look at 2019, there's another question which was tested, and they gave out a lump sum figure for the opening work in progress. So for us to do this, the first thing we need to do is to come up with what we call throughput account. It is a dummy account of the process account. Let's see. So this dummy account will show us some few things here. We call it throughput account. We only indicate units. So we have, of course, debit side, the credit side, as usual. So the first thing we are starting with is opening work in progress. What is our opening work in progress in terms of units? What is our opening work in progress in terms of units? In terms of units, we have 4,000 units. 4,000, so we have 4,000 units as the opening work in progress. Then as we move down, number 2, we are being told that units received from process P were 40,000 at a cost of 1,700,550. So what do we have? These items relates to process Q. We are talking about process Q. So we have P and Q, but the units received from process P have been given to us. Instead of bringing in raw material, this is not a new process. These are a continuous process. So we are from process P, we are given its items. We are now having process Q. If you can recall from our Tuesday's class, we had process 1. We had process 1, then of course we also had process 2. If you can recall very well, we had some raw material being brought in, right? We had some raw material being brought in here. Then after production, we talked about these items being taken to process 2. So when you come to process 2, or when we came to process 2, we talked about some things coming from process 1. It's the same way we are dealing with this. So process 1 is already complete, which is Q, right? So we are dealing with process. P. P was complete. We are now dealing with Q. So as we go to process Q, some items came from process, some items came from process P. That is what I want to record. What is the name of the T account? Throughput account. Throughput account. Not necessarily in exams, but I want to use it to explain to you what we are going to do in the entire part of the question. So we talk about process P. Process P gave us some materials. What is the quantity of what came from process P? What is the quantity of what came from process P? 40,000. Say in the throughput account, we only record units. We only record units. So we have a problem with the board. Let's see. Leo, talk about. Great. So we're talking about items coming from process P. At this particular point, we'll talk about raw material. Why not raw material? Because the final product of the first process is the raw material for the subsequent or the following process. And that's why we are now referring to the name of the previous process. Good. Then under information number 3, additional costs incurred during the period in process Q are as follows. We have material, labor, and overheads. Closing work in progress was 3,000 units with the following degree of completion. So we now have closing work in progress. We're given 3,000 units. Do we have percentage of normal loss or expected output? When you move to part 5, units scrapped were 4,000, having the following degree of completion. So the scrapped unit is basically a combination of normal loss and abnormal loss, or a combination of normal loss and abnormal gain. That combination added together will give us the total scrapped units. You can also recall from our Tuesday's class, when we are preparing what we call normal loss, we prepared normal loss account, where number 1, we brought in the normal loss units, which were taken to the scrap account. The normal loss units, which were taken to the scrap accounts. Then also our abnormal gain account, we were now crediting this account, right? From the process account, we were to credit it here from whichever process, then take this to scrap account and of course income statement. Again, scrap account was receiving some units. Scrap account was receiving some units. So this is process, let's scrap out. Yeah. So let's come and see. So a combination of normal loss and abnormal gain or abnormal loss will help us to get the total of the scrapped units. The next thing we are given number 6. The normal process loss was 5% of the expected production. Was 5% of the expected production. So yesterday, or on Tuesday, we said that normal loss is equal to maybe 5% of the total input. That is without work in progress. With the work in progress, we expect the percentage of normal loss, which is 5%, to be of, number one, opening work in progress of 4,000 plus input of 40,000 minus closing work in progress of 3,000. So when you do that, what are you getting as our normal loss? What are we getting as our normal loss? What are you getting as our normal loss? Okay, from what you know, from what we did on Tuesday, can you please give me the normal loss? You are told that normal loss is 5% of the expected output. So from what you know, from what we did on Tuesday, what is your normal loss? So before you get to what I'm given as 2050, what is your normal loss from your Tuesday's knowledge? What is your normal loss? What is your normal loss? The only thing that is meaningful in this account is the throughput account that I've prepared. The normal loss we prepared on Tuesday, abnormal loss account, abnormal gain account that we did on Tuesday. I'm just referring to them to explain to you what we are doing. As per our Tuesday's class, what is your normal loss? $20.50. Ukiniambia $20.50 unanidanganya because closing work in progress was not there on Tuesday. But anyway, for us to get normal loss with opening work in progress and closing work in progress, it is 5% of the expected output. The expected output here is what was brought in as the opening work in progress, the additional raw material minus the closing work in progress. The closing work in progress here will only be subjected to the normal loss during that period when it is now converted to a final product. So closing work in progress is not subjected to the normal loss percentage. That is why we take our input of the opening work in progress, we add to what has been added as raw material or the new raw material, then we less the closing work in progress. So that's how you're getting the 20. You're getting the 20.50. So you come here and bring 20.50. Good. If you look at the question, now that this is the last process, there are those goods that were transferred to the finished goods account. So can you tell me finished goods figure? Finished goods account. How many units were transferred? That is actual production. Actual production to Konayo. You should be having it. In most cases, it is normally given. So what is the actual production? What was taken to the finished goods account? Somebody? Finished goods account? Finished goods account? 38,950, 3,000. Where are you getting it from? Which additional information is giving you the finished goods account or the finished goods figure? Which additional information? Number 4. The closing work in progress was 3,000 units with the following degree of completion. The only thing I'm able to see there is closing work in progress. Closing work in progress is that raw material being converted to the finished product, but it got to the last time of that particular, or the last hour for that particular day, and you did not complete the production. So you had to take it to the other day. But finished goods are those quantities that are now ready for use. For the, in this case, we're talking about the last process. We had process P and process Q. So once you're done with the process Q, you will talk about finished goods. How many units were transferred to the inventory account, the finished goods account? How many units were transferred? How many units were transferred? Okay, so take 1 minute and read the question. Just take 1 minute and read the entire question before we proceed. Maybe that will assist. Good, so let's see what we have under note number 3. I can only see closing work in progress. Number 5, we have unit scrap. So I told you something, that the unit scrapped, I think I mentioned this during our Tuesday's class. Components or scrapped units. You are able to see when we're preparing the abnormal loss account, the abnormal gain account, right? The normal loss account, you are taking those things to the scrapped account. So number 1, normal loss. Number 2, abnormal gain. Number 3, abnormal loss. And definitely, we cannot have these two, abnormal gain and abnormal loss, at the same time. No, we only have one of them at a time. So do we have normal loss? Yes. 20, 50. What else do we have? What else do we have? Remember, the account has to balance. The account has to do what? The account has to balance. So let's see. 20, 50. So you have to know between abnormal gain or abnormal loss, what are we having? Because at the end of the day, when you add all these things, what are you supposed to have? The scrap units, tumeambiwa ni ngapi? Scrap units tumeambiwa ni ngapi? Scrapped units, 4,000. A total of 4,000. A total of 4,000 units. That's our scrapped. That's our scrapped unit. So what are we having as the abnormal gain or abnormal loss? What are we having as the abnormal gain or abnormal loss? What are we having as abnormal gain or abnormal loss? $19.50. Of course, abnormal, so this one we supposed to prepare it. This is also to be Roman kidogo. Let me see what is happening. Our total is 4,000. So let's say this is the scrap units account, right? The scrap account. And we already have the normal loss. Look at how normal loss is behaving. Normal loss is coming from the process account, right? You can see how we have recorded it. So we are going to debit the normal loss account by talking about process Q. This is what we did. And of course, brought in the 2050 units. This account was balancing. You have to take all of this to scrap account, that is 2050. When you come to the scrap account, we are now debiting it, right? So normal loss is giving us 20, is giving us 2050, is giving us 2050. For us to have a total of scrapped units of how much? Scrapped units of 4,000. A total of scrapped units of 4,000, then something must happen on this side. Something must happen on this side. What is that account? That will bring scrapped units to 4,000. We have been able to see it is 1950. The question is it abnormal gain or abnormal loss? That is the question. Is it abnormal gain or abnormal loss? Let us have just a sample of our abnormal gain account. So abnormal gain. If it was abnormal gain, you can see it was to be recorded on this side and on the debit side of the process account. So when I go to abnormal gain, I now record it here. So say maybe process Q. If let's assume it was this 1950, right? So when I come to abnormal gain here, I talk about scrap. I'll be taking the 1950 to the scrap account. So when I now come to the scrap account, I'm debiting it here. This side it will be credited. That is 1950. Is that the case for us? No, because abnormal gain will actually be on this other side. How about if it was abnormal loss? So talk about abnormal loss. Abnormal loss, right? So abnormal loss is normally credited in the process account. When I come here, I will debit it, right? So process Q is giving us 1950. Then you take it to the scrap account, we take the 1950. I'm crediting here. So when I come to the scrap account, I'm going to debit abnormal loss 1950, and you can see where we need it. So once that is done, of course, now know what is supposed to be done. So this one here is not abnormal gain, but is abnormal loss of what figure? 1950. When you add the two, what are you getting? You are getting 4,000. So that's how we identify what was missing. Abnormal gain of 1950. But now, with that still, the account is not balancing. With that, the account is not balancing. Remember, the unit has to balance. The unit has to do what? The unit has to balance. So let's come here and look at the total on the debit and also on the credit. When you add everything here, what are you getting? 4,000 plus 40,000. Oh, tumepata again. Sorry for that. Abnormal loss. Sorry for that. Sorry for that. So because you don't have abnormal gain, definitely this is the total amount. That is 44,000. We expect it to balance on both sides. Whatever is missing represents the finished goods that were transferred to the finished goods account. So how many units do we have there? Why did we find it as a normal loss? Oh, sorry, I've rectified that mistake. Don't worry. I've rectified it. Sorry for that. What do we need to make the account balance at 44,000? Watu wangu leo wananikusha. Watu wangu leo wananikusha. 37,000, but don't write it fast. I want us to know how to deal with it. 37,000 units. There's this information given to us. I want you to read it carefully because it will dictate how you're going to deal with the 37,000. Additional information number 8. The company uses FIFO method of valuation for the opening work in progress. As we bring all the expenses incurred to produce the 37,000 complete units, out of the 37,000, the opening work in progress of 4,000 was completed. So the goods that were, the material that was brought in and used to produce goods within the same time to completion is only for how many units? For 33,000. The remaining 4,000 represents our opening work in progress, which must be valuated using FIFO method. First in, first out. So don't use this as a lump sum figure. Utakwama tukifika huko mbele. What do you need to do? you need to separate the finished goods. You need to tell us this finished goods has to be divided into two. Opening work in progress of 4,000 units. Then we talk about started and transferred. The other 33,000. So that when you add them together, you'll get 37,000. Why are we separating them? The method of getting cost of the 4,000 is different from the method of getting the cost of the 33,000. So that's why we have to separate them. That is why we have to separate them. It is now FIFO that is ruling. Everything is now left at the mercy of FIFO method. Good. Having done that, we now know that our account will be balancing. It's just there to guide you. It's just there to guide you. So in exams, you will not be told to prepare throughput account, but it will help you to know what you need to do. Right? So after doing that, I simply do away with my throughput account because of space. Let me do away with the throughput account. The first thing you are told to do is statement of equivalent units of production. So can you prepare statement? Statement of equivalent units of production. The statement no. That just actually it is simplifying your work because the real assignment ndio hii tunaenda kufanya sasa. The real assignment ndio hii tunaenda kufanya. So let's have that throughput account which we have prepared. It is an extract of this statement of equivalent units of production. So let's start from here. I hope that part is visible. No. Yeah, it's visible. Good. So this is what we're going to do. We have some space here. We create some good space here, divided into two. So we have to make space that is sufficient to accommodate what we divide in there. Then from that, we have three items. We have material. We have material. We have labor. And of course, we have overheads. We have overheads. Then here we have input. We have output. If you can recall this now, that process account or the throughput account, right? So we have the information there, right? So we have the information here. We start with opening work in progress of 4,000 units. Then we bring in what came from process P of 40,000, right? Then we talk about what else you are having the other side. So we come here and talk about normal. Normal also then come down these other sides, right? So we start with our opening work in progress. Then we talk about started and transferred. Started and transferred. So the opening work in progress, we had 4,000. Started and transferred, we have 33,000. Then we have abnormal. Let me bring the normal loss first. Normal loss of 2050. Abnormal loss of 1950. Then of course we have closing work in progress of, was it 3,000? Confirm to me whether this was 3,000. Closing work in progress. Was it 3,000? Yes. So this is what you're supposed to do. The account has to balance. The extract of the throughput account ndio iko hapa. Right? This is what we have. So we have 44,000. So 44,000. Confirm that that is the correct thing we are talking about. Confirm that this is the right thing. Thank you. Now we have some issues here we need to address. So we need to address those issues by dividing again this into 2. By dividing this into, we have percentage and then we have units. We have percentage and then we have units. We have percentage and then we have units. What is the ruling method? People first in, first out. Great. Why are we considering these percentages? If you look at our question, the first thing we are being told, information number 1, our opening work in progress at the following degree of completion. Number 1, material was 100% complete. And we are preparing transactions for which process? For process Q. So my question is there any raw material we are going to add to the opening work in progress? During the current production, is there any raw material we are going to add? There is none. Why? Because that opening work in progress has got 100% completion for raw material. So, under percentage of completion, we write 0. We write 0 for raw material. How about labor? Our opening work in progress, labor is 60% complete. During the current process, what percentage are we going to complete to convert it to a finished product? 40%. For the overheads, 60% is complete. What are we going to complete during the current process to convert it to a finished product? 40%. Now the question is, I'm to be able to repeat. Yesterday, you did your production, but you did not complete the production. When you do the production, you need that raw material, you need labor, you need overheads. So what happened? Raw material was fully availed yesterday. So as you do your production today, you will not add any raw material, right? They are part of the expenses you're going to incur today to do the production will not include raw material because it was already provided yesterday. But for labor, there's someone who has to work to convert that raw material to a finished product. So labor was not fully utilized yesterday. If you look at our opening work in progress, material was 100% complete. So during the current production today, we don't need any raw material. That is why the raw material to be completed is 0%. For labor, 60% was completed yesterday. We only remain with 40% today to call it a finished product. The same to overheads. Are we together up to that point? Are we together? Are we together? Are we together? Great. Now, our opening work in progress is 4,000 units. For material, we are completing 0%. So material will be 0 units. For labor, we are completing 40%. So what is 40% of 4,000 units? What is 40% of 4,000 units? $1,600. Then the same 1,600. 40% of 4,000 units. That is the origin of the title of what we are preparing. Statement of equivalent units of production. Statement of equivalent, not actual units, equivalent. When you take 4,000 and share the cost to the 4,000 units, you will be wrong. Because this 4,000 only applies to material, which was completed in the previous period. So material, we don't add anything. So any expense incurred during the current process should not be shared to the direct material. Equivalent units completed during the current process. Let's go to this one here, started and transferred. Started and transferred, you brought in a complete or pure raw material. You took them into the production process. You called the production team, they came in. You incurred the overheads and also place it there. At the end of the day, you are able to get complete products. That is the origin of the name, started and transferred. You started production in the morning, converted these raw materials into finished product without anything that was remaining incomplete. So we call it started and transferred. If we look at the percentage, what is the percentage of raw material that was brought in during this production? Percentage of raw material itakuwa ngapi? You brought in new raw material, 100%. You brought in labor fully, 100%. Overheads, 100%. Right? 100%. So 100% of 33,000 is 33,000. 33. Have you now seen the reason why we are not going to take the 37,000 as a block figure? Have you now seen the reason? If you are to take the 37,000 and bring it here, you can see material for the 4,000 is 0. But now for the 33 is 100%. So that's why we have to separate them. Who is ruling? FIFO method. Good. Let's come to normal loss. Let's come to normal loss. Were we given percentage of completion for the scrapped units? Were we given percentage of completion for the scrapped units? Good. We are having that. How the 100% is coming? Which other approach can I use to explain that? There are some things that you are doing maybe at your workplace. You are told to prepare maybe financial statements of 3 companies. Today or yesterday, you are assigned to prepare financial statements of 3 companies. Now, by the end of the day, yesterday, you managed to fully complete financial statements of 2 companies. The 3rd company, you only prepared income statements. You are not having statement of financial position. You are not having the notes or other accounts. So when you went to work today, you are also given 3 other companies. Or you are to record that you have completed the work for another 3 companies. These 3 companies that you completed their work includes what you did not complete yesterday. So the full company that you've been able to take care of today, fresh companies, are only 2. Is that okay? The same way, so this is what you left pending yesterday. The 4,000 you left pending yesterday. But now when you came today, during the current process, you have been able to complete them. You will not do everything today about this company. No, you only do the remaining portion. That is the opening work in progress. Then you have been given 2 new companies that you managed to fully complete their financial statement. So everything, if it is balance sheet, if it is statement of profit or loss, you did them today. fully until they were submitted for review. That is the same way we are talking about now, started and transferred. You brought in raw material, you brought in labor, overheads, and you're able to complete 33,000 units. So everything for these 33 units or 33,000 will be 100% during the current process. Is that clear? Is that clear? During our Tuesday's class, we said, once you have the process account, we talked about finished goods or what was taken to the next process, finished goods. The finished goods in this question is supposed to be 37,000 units. That is what we got. The 37,000 units includes 4,000, the opening work in progress, then what was started and transferred during the current process, the remaining 33,000. That's how we got the 33,000. If you do them lump sum, like together, you will not get the answer. Why? Because of this rule and because of the percentages of completion that are not equal. It is 100 for the 33,000, it is 0 for the 4,000. 100 for the 33,000, 40 for the 4,000. So that's why we are doing it that way. I hope I've answered your question in a polite way. Good. Then the next thing, let's go to normal loss. Let's go to the normal loss. So the normal loss, what did we say about normal loss when you want to get the valuation of your inventory? When you want to get the process cost, the process expenses, what did we say about the normal loss? What did you say about the normal loss? What did you say about the normal loss? Even if you are given percentage of completion for the normal loss, even if you are not given percentage of completion for the normal loss, they do not form part of the product cost. We normally deduct them. Are you able to recall? Cost per unit, our cost per unit on Tuesday, we said is equal to total cost of input minus scrap value over total input in units minus normal loss. This one here is also called expected output. You can recall our 95% expected output. Why? Because 5% was a normal loss. With or without percentage of completion, normal loss is hot air. That is what you do to the normal loss. Abnormal loss will form part of product cost. We add it. Abnormal gain will be deducted when you get to equivalent units. So let's come to the abnormal loss. Abnormal loss is part of the scrapped units. So we'll use the percentage of completion given there. What if you are not given percentage of completion for the abnormal loss? Tungefanya nini? What if you are not given percentage of completion for the normal loss? What if you are not given percentage of completion for the normal loss? Or I mean abnormal loss. What do? The abnormal loss is basically producing goods of substandard quality. But these goods pass through all the processes during the production process. These units were subjected to all the stages during the production. So if I'm not given percentage of completion for the abnormal loss, for the abnormal gain, I will use 100% for every item. Please put it somewhere there. If you are not given percentage of completion for the scrapped units, then assume everything will be 100%. So look at our question. Were we given that? Yes, we were given that. So if you're given percentage of completion, that is what you use. If not given, 100%. These abnormal loss happened during the year. So what do? That is 100% for material, labor and overheads, 80%. So what is 100% of 1950? That is 1950. What is 80% of 1950? What is 80% of 1950? What is 80% of 1950? 15, 60, 15, 60. What have I said to Mesema? What if these figures were for abnormal gain? Ingekuwa abnormal gain? Ingekuwa abnormal gain to say abnormal gain 1950. What have we agreed upon? Unafanya hivi, unasema less, you put in brackets, all of them, you put in brackets. But because it is not abnormal gain, we add. They are forming part of the product. Costs. Now, let us come to the closing work in progress. Are we given percentage of completion for the closing work in progress? What of the normal loss? If you are not given percentage of completion for the normal loss, you assume that it's 100%. But now, what is the essence of doing that? Yet, so long as you have normal loss somewhere, unaeka dash. Just put a dash throughout, whether you have percentage or not. Normal loss, you leave it that way. I've explained it using the cost per unit here. Our closing work in progress. Were we given percentage of completion? Yes. Additional information number 4. 100% material, labor and overheads, 50%. Now, somebody's already having a question. And the question will come from what I'm going to do here. Now, please bring that question. Bring your question. Bring your question. 100% of 3,000 is 3,000. I can see your question. 50% of this, 1,500. 50% of 3,000, 1,500. Somebody is having a question. Please bring your question. And if you don't have a question, tutasema you are pretending. Somebody is having a question. Good. And this is the question. Mtu anajiuliza, why are you now changing these things? When you are talking about opening work in progress, you are taking the remaining percentage. But when you now come to closing work in progress, you take the figures the way they are given. What are you doing? Can you please tell us the direction to take? Why not 0%? Right? Why not 0%? Why not 50% for the other one that is remaining? Yet, for the opening, you told us, if it's 100%, we put 0. If it is 60%, we put 40. Right? Why? Why that? Now, this is the answer. Remember, opening work in progress, 100% was completed in the previous duration. What we are completing currently is 0 for the opening work in progress. But for the closing work in progress, the 100% was completed in the current period. Why are we interested in that? Our main aim here is to get the expenses incurred during the current process. Right? So what was incurred yesterday will not form part of our today's production expenses. That is why if material was 100% complete for the opening work in progress, we are completing nothing. 60% was complete in the previous process. We are only completing the remaining 40%. But for the closing work in progress, it has been initiated today in the current process. So we have to take what has been completed in the current process. Is that clear to somebody? Is that clear to somebody now? Good. There's a question up here. Year 1560, labor and overheads. How are we getting it? What they did, of course, I can see hata wangekushika. Ungekuwa kwa hii sitting ya April 2024, wangekushika because they have just decided and said, yes, we are dealing with 3 items: material, labor, overheads. What they have done, look at information number 4, material 100%. Then they have combined labor and overheads to have the same percentage. Labor, 50%. Overheads, 50%. They have combined the two. Right? Even closing work in progress. Even information number 5, the scrapped units. Material, 100%. Labor and overheads, 80%. So 80% applies to labor and also overheads. And we are taking these percentages of the units we are having in the throughput account. We are trying to get the equivalent units. Are we together up to that point? Are we together? Are we together? Are we together? Good. After doing that, we now get the equivalent units. So please let us get the total amount or total units for material. How many units do we have? 33,000, 1950, 3,000. 1,600, 33,000, 1,560, 1,500. Can you please add everything column-wise? Material, 37,950. Labor, 37,660. Overheads, 37,660. Can someone confirm that what have been given here is actually correct? Can someone confirm to us that what have been given here is actually correct? Perfect. That is a complete statement of equivalent units of production. The next thing you're supposed to do is to come up with what we call statement of cost. Statement of cost will help us to get the total costing cut under the 3 items. So we'll now come here and talk about material. Let me try to minimize here. So we have a statement of cost. So statement of cost, we have details. So we have material. We have labor. We have overheads. And to save on time, we can do them in thousands. Those zeros are too much. We can do them in thousands. So I want you to listen and listen carefully, especially when you now talk about opening work in progress. We start with opening work in progress. If you look at the cost of the opening work in progress, was it shared to all the items or we had a lump sum figure? Was it shared to all the items or we had a lump sum figure? It was shared to the 3 items. So if it is shared to the 3 items, it is normally very, very simple. You bring your opening work in progress and put the amounts that relates to each item. What if it was a lump sum figure? If it was a lump sum figure, the entire amount is recorded under Kama utasahau hiyo, please put a note somewhere. So our opening work in progress, as I can see, material, we have 240,000, right? Material, we have 240,000. Labor, we have 144,000. Overheads, we have 72,000. Good. From the opening work in progress, we have some material that was brought from process P. So let's come and bring in process P items. Again, so process P. Look at what we received from process P. Was it shared or it was a lump sum figure? When you said what you said about it. The lump sum figure, if you're given lump sum figure for opening work in progress, you record it under material. If it is shared to each item, then that's the same thing you do. For example, I think that will help me to solve it. Information number 2 will answer our question. Units received from process P were 40,000 at a cost of 1,700, 550. So what we have there is not shared. They have not split it into material, labor, overhead. So a lump sum amount like that one will be recorded under material. Right? So process P, we record our 1,700, 550 under material. And these ones here, just put cash. That's what I was explaining. Then from process P, we also have additional items. So additional costs. Additional cost. The additional cost again is shared. Information number 3. We have 759,000. We have 759,000. We have 1350. 1355. 760. Now they are in thousands. Then we have 640 to 20. From additional items or additional costs, what else do we have? What else do we have? If you can recall how you are getting the cost per unit. Somebody's. If not shared, there will be only percentage like labor 80%, but no cost next to it. Yeah, just have it. Whatever we have up here will not be affected. Whether it is lump sum or a single figure, whatever we have in the statement of equivalent units of production will not be affected. The lump sum or shared will affect statement of cost. Good. When we are getting cost per unit, we talk about total cost of input minus the scrap value divided by expected output. That scrap value, how are we getting the scrap value? And you can remember, we were deducting the scrap value. That is basically the scrap value of the normal loss. So you come here and say less scrap value, less scrap value of normal loss. What was our normal loss in terms of quantity? Our normal loss was 2050 units. What is the scrap value per unit as per our question? What is the scrap value per unit as our question? Or which additional information is giving us that? Additional information number, the scrap value per unit. That is the unit scrapped. The unit scrapped is the normal loss, 2050, 1950, giving us 4,000. But the cost per unit is 15,000. Our figures are in thousands. Our figures are in thousands. So what do we need to do? we multiply by 50. Tunapata ngapi? Tunapata ngapi? Tunapata ngapi? 30,750. Do we need to add or deduct? We need to less 30,750. Good. So once we do that, we should be able to get total cost. Total cost ni ngapi? Column wise. Total cost ni ngapi? Column wise, column wise, column wise, column wise. For material, tunapata ngapi? Someone to calculate for labor, another person to do for us the overheads. Material, ni ngapi? Someone to even add these two, atupatie bigger, then overheads. 26, 266, 8800. So we have 2, 66, 88, 800. That is 26,688,000. Overheads is 712 to 20. Thank you for that. 712 to 20. Labor ni ngapi? Labor 16. 1369. Labor. Remember, this is 144,000. So hapo umekudanganya kidogo, hapo umekudanganya. 1490. 1499,760. 1499,760. 1,499,760. 26. Hii ni 26 million ama ni 2 million? Is it 26 million? Overhead is wrong. Naambiwa overhead is wrong. Overhead is wrong. Labor is 2 million. Haiwezi fika 2 million. How can it get to 2 million? And this is 1,355,000. 355, we need around 600 to get to 2 million. So haiwezi fika hapo. 26, 266,8800. So this one here is 0, 0. So that is 2,668,800. Haya, mtu anapata tena 620, 820. Good. So what I want you to do is very simple. Can you confirm that all these figures are correct? Can you confirm that all my figures are correct? Can you confirm that our figures on the board are all correct? $712 to 20. Perfect. Now, this is what we call statement of cost. And you are free to give us cost per unit or cost per item under statement of cost. That is to say, you can bring now units to the statement of cost, but you cannot take cost to the statement of equivalent units of production. So can we bring here units or equivalent units? Just indicate units. So the units under material, we got 37,950. 37,950. Under labor, we got 37,660. We got 37,660. We are required to get cost per unit, right? Cost per unit or unit cost. So cost per unit. Can we get cost per unit? And please round off to 5 decimal places. Round off to 5 decimal places. Round off to 5 decimal places. Cost per unit. Cost per unit. Watu wangu wananiangusha kitu. Cost per unit. Then you also get at least one. Labor. 5 decimal places. 39, 82, 369. 39. 39.82369. Right? 70.32. How are you getting it? How do we get cost per unit? Tuko na total cost na tuko na units. Total cost divided by units. 70.32. Four and 1. 70.32, 4 and 1. Overheads. 18.911. 911. 18.9, 18.8. Acha nitafute yangu. 18.911. 84. I hope you've deducted this. Your 70.32411 is arrived at by factoring in this one here. Tumetoa? Hiyo ni negative, tuna deduct. Perfect. Do we have this, all of us? Are we all having this? Thank you. The next thing, we are going to what we call statement of valuation. Statement of valuation. Statement of valuation. Statement of valuation. Statement of valuation is very simple. We now want to know these equivalent units of opening work in progress that we are supposed to complete during the current process. What is its value? What is the equivalent cost? This started and transferred, what is the equivalent cost? This closing work in progress, what is its equivalent cost? That is what we do under what we call statement of valuation. So let's start with opening work in progress. Our opening work in progress, as you can see, do we have anything for material in terms of quantity? We don't have. So that is like that, we just leave it. How about labor? Yes, we have 1600 units. So 1600 units, we multiply by the cost per unit under direct labor, which is 39.82369. Plus, we have for overheads, yes, 1600. Times 18.91184. Nataka tufanye hivi, then I'll show you what to do. So once you have this for the opening work in progress, once you have that, you can now round off your final answer to the nearest whole number. So what are you getting? That is first approach. Or Remember, we have the same number of units, 1600, 1600. Instead of taking this approach, inakuwa kazi rahisi by just taking, so or just take 39.82369 plus 18.91184. Once you add the cost per unit, then you now multiply by 1600. I expect you to have the same answer as what you're getting under the first point. So Lila is giving us 93, 977, 93, 977. Good. So Lillian, can you confirm to us that when you take method number 2, you will get to the same point? Or any other person, can you confirm? Will it take you to the same point? Good. Now tumeona method 2 is very simple, right? Second approach. Tunaona vile na summarize everything. So I think if you are okay with method 2, follow that. Ikishindikana, let's stick to method 1. But either of the two, when worked out correctly, will give you the right answer. Good. Let us look at now started and transferred. So started and transferred, we are looking at it has got 100% labor. I mean material, 100% labor. Overheads also. So we have the 3 items. In terms of units, we are going to apply the 3 costs. That's number 1. Number 2, we have the same number of units. So what do I need to do? Let us add these costs and multiply by 33,000. So let's take 70.32411 plus 39.82369 plus 18.91184. The all of these are multiplied by 33,000. What are you getting? 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 Somebody to give us the answer there. Aha, 4258, 4258, 4258, 6, 4258, 9, 42, 4258, 968. 968. You need to round off. Oh, good. So that is 4,258,968. Good. Are you able to recall? There's something that we did. When we are starting, we said that, you know what? They are finished goods. Yes, they are finished goods. But we have opening work in progress. We have started and transferred. Do you know what we are going to get when you add the 2? Do you know what we are going to get when you add the 2? The cost of finished goods. So the cost of finished goods, we add. Can you please go ahead and give me the cost of finished goods? Finished goods. 4352. $945. So if you can recall our Tuesday's process account, we were talking about finished goods and taking a lump sum figure. So you now take this lump sum figure. In the process account, you will now not separate them. But your journey to getting this amount, umeona vile tumefanya nini? Vile tumeteseka hapo katikati. Good. So I've been able to get the cost of finished goods. That is perfect. Can we now go back and get the cost of abnormal loss? So we now come here and talk about abnormal loss. So abnormal loss, we have it here. We have units under material, under labor, under overhead. So let's start with material. We have 1950 times 70.32411 plus labor and material have the same number of units. So I don't multiply separately. I add these two and then multiply by 1560. So that is 30 what? That is 39.82369 plus 18.91184. This we multiply by 1560. That we multiply by 1560. So what are you getting? What is the value of abnormal loss? 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 Finished goods tumepata aje? The opening work in progress, started and transferred, added together, imetupatia finished goods. Aha, the value of abnormal loss, tuko na 228,759. 759. Can we go to the last one, the closing work in progress? Can we get the value of closing work in progress? Our closing work in progress, again, the same pattern, 3,000 for the material and the same units for labor and overhead. So we now come here. And talk about 3,000. 3,000 times 70.32411 plus close the bracket 39.82369 plus 18.91184 multiply by the same units under these two, that is 1,500. What is the value of closing work in progress? $299,076. $299,076. Do we have the same figure? Do we have the same figure? 299,076. Do we have 299,076, all of us? Na tuko na scrap value mahali. Don't forget that. Scrap value is equal to the normal loss of 2050. Na tuko multiply na 15,000, that is 15 in thousands. Tukapata 3750. 3750. 3750. Good. If you can recall, so do I need to do that? Let me see how many minutes we are remaining with. 18. I think that's enough for the process account. Because of my space, I don't have enough space to put everything down. But I hope you do. Or can we squeeze it here? Possibly. Let us try. It's manageable. Our figures are in thousands still. So we have details. We have details. We have units. Cost per unit is not necessary, but of course you see what we do. Then amount. Then we have details, units, cost per unit. Then we have amount. I think we managed. So this is not by tutorial. That is 750. Sorry. We have 2050 times 15 is equal to 3750. Which process were we dealing with here? Process Q, if I'm not wrong. So that is process Q. We have details. Units, cost per unit, amount. We have details, units, cost per unit, then we have amount. Then we have amount. Good. Let's look at the first thing. We're talking about opening work in progress. We add 4,000 units. And what was the value of the opening work in progress? We are now preparing what we call process account. Under process account, we consolidate everything. So our opening work in progress. The original cost, the cost of input, the input cost. Ilikuwa ngapi? Opening work in progress, we had 240, 144, 72. Can we bring all of them together? Tunapata ngapi? 240 plus 72 plus 144. Tunapata ngapi? Somebody. 456,000, right? We are getting 456,000. Then from the opening work in progress, the inputs, we add process P. Process P gave us some items, gave us a lump sum amount of 1,700, 550. 1,700, 550. And of course, the units were 40,000. Anything that was not related to cost, units, we also add additional costs. So the additional cost, we have material, we have labor, we have overheads. Can we add the three figures? Can we add the three figures? Can we add the three figures? 2754, 2754, 2754, 980. Good. Then from there, we were having what we call, from the additional cost, that is the total cost of input, if I'm not wrong. Opening work in progress, process P, additional costs, that is it. Let us go to the credit side. On the credit side, we have some few things here. Number one, we have normal loss. You can now get to what we are used to, that is normal loss. Our normal loss is this one here, the scrap value. We add 2050 units, whose cost per unit is 15 shillings, which is giving us 30,750. Then from that, remember we are having what we call finished goods. Finished goods. Our finished goods, in terms of units, we now know what it means. Mwalimu, hiyo 456 inatoka wapi? Hii 456 inatoka wapi? 456,000 opening work in progress. Our opening work in progress, we have material 240,000. We have labor 144,000. We have overhead 72,000. When you add the three, is your figure different from 456? If yes, please let me know. So our finished goods, if you can recall from the original point through from the throughput account, we add 37,000 units. The 37,000 units, we now bring them back here as a lump sum figure, 37,000 units. Cost per unit, we cannot talk about because you can see, for us to get the finished goods, tukuna easy costs per unit and all that. So just bring the lump sum amount of the finished goods. That is 43,945. Then from the finished goods, we have abnormal loss. Abnormal loss. Of how many units? Of 1950. What is the value of the abnormal loss? Abnormal loss is 228,759. Then the last one, we have what we call closing work in progress. How many units? The closing work in progress as per our extract here, 3,000. What is the value that was completed during the current production process? 299,076. Units has to balance. Amount column has to do what? Has to balance. The amount column has to balance. Unit has to balance. The amount unit has to balance. So I can see we have 44,000 here. Is it the same as what we have in this side? Wacha tuangalie 4,000 plus 3, that is 37,000. Ndio iko hapa. 2050 for somewhere there. 1950, 3,000. It is actually balancing. So we have 44. Good. Can we add the amount, the total cost of input? Tuongeze on the debit side and on the credit side. Tusaidiane hapo as we see what to do next. At 49,11,530. Is that debit or credit side? Is that debit or credit side? Both. 49,11,530. Okay. 49,11,530. 49,11,530. 49,11,530. 49,11,530. That is the process account by use of what we call FIFO method. So FIFO is telling us, yes, you want to do the valuation of the finished goods. But remember, if you're using FIFO, you first of all complete the opening work in progress before you process the new raw material. So because of that rule, we have separated the two. Because of that rule, we now know that out of the 37,000 units, what will happen? The remaining 33,000 represents what was brought in, the fresh raw material, which was brought in and converted to finished goods. As we do the valuation of finished goods, you value the opening work in progress separately. You value what was started and transferred separately. When you add the two, it gives you finished goods value. All in the power of FIFO method. Right? Yeah. So that's what you're supposed to do. What is normally common in your exams, in In previous sittings, in previous years, maybe 2022 and below, they were not telling you to prepare what we call statement of valuation. So imagine this work here, this entire work here was not giving even 0.5 marks. This entire work under the statement of valuation was not even giving you 0.5 marks. Until we got to 2023 up to date, where when they test a question of this kind, under Roman 2, they tell you, prepare statement of valuation. So the moment they say that, you now get marks for doing this. That's why I decided to separate them. So when you do opening and this, and then tell us finished goods, we give you some 2 marks there. When you tell us abnormal loss, we give you another 1 mark. Closing work in progress, another 1 mark. And when you come to the process account, you also get marks for the correct posting. So you are getting marks twice, right? You are getting marks twice. If this is correct, you get maybe 3 or 4. Again, process account, the same figures you are bringing in here also gives you another marks. Then statement of cost, that's a common thing. That one has to be there, whether even previous sittings. Statement of equivalent units of production, it has to be there even in the previous sittings. Process account, it has to be there. Now, I decided to do this question and capture everything that you might be asked to do. Can we now go to the required and see if you can do anything? So under required, the first thing I can see there is determine the units abnormally lost in process Q. So intentionally, I decided to avoid that required, because if I could have read that question, atungelewa, how do we know that this one here was abnormal loss? So I gave you another approach. If I was this examiner, I would have told you to identify whether this company has got abnormal loss or abnormal gain. But by reading required for Roman 1, already you know that whatever is missing to make the account balance is abnormal loss, not abnormal gain. Then, of course, we now have it. You have it somewhere there. Roman 2, prepare statement of equivalent units of production. This is that statement. Roman 3, prepare a statement of cost. This is the statement of cost. Roman 4, prepare process Q account. This is the process Q account. They did not tell you to do statement of valuation. What if it comes in August exams? Now that we are eagerly waiting for this specific question. Then the last one, prepare abnormal loss account. Do you think you not manage to prepare abnormal loss account? Na tuko nayo hapa. Abnormal loss, is that a problem? Is it a problem to somebody? No. Let me see statement. I think you captured that somewhere. Abnormal loss. Where is it recorded? On the credit side of the process account. So we debit process Q. We are talking about how many units? 1950. And the value is 228. 759. Then we talk about scrap. Take it to scrap, the entire units, 1950. And we take them at what cost? At 15 shillings per unit. What will we have? What will we have? What will we have? Somebody to help us there. Titles. Somebody. So details, unit, cost per unit, amount. Details, units, cost per unit. details, units, cost per unit. 1950 by 15. 1950 by 15 ni ngapi? 1950 by 15 ni ngapi? $19.50 by 15. $29,250. So we have 29,250 going to scrap account. Abnormal loss. We are going to do what? We are now taking this to income statement as a loss. Can you give me the balancing figure? Can you give me the balancing figure? What is our balancing figure? 228,759. Balancing figure, the difference between what you posted there and the 228,759. The difference between what you posted there, 199,549. 199,509. And of course, we take it without units. The units have been taken to the scrap account. These have been taken to the scrap account. The 1950 plus normal loss of 2050. That one is giving us 4,000. Good. That is what you are required to do. So even if I decided to disappear today and only appear when you will be getting to advanced level, you have what it takes to get at least 95%. Hatutaki 100%. What we have done up to date, including the 4 p.m. revision that we did, I can confirm to you that the content you are having is for someone who is looking for 95%, not 50. 50 tulipata tukiwa in the month of June. By the time we are done with the month of June, tulikuwa natafuta 50. So July up to date, wewe ni mtu wa 95%. Wewe ni mtu wa 95%, si 50. 50 wachia mwenye amesoma 2 weeks to exams, right? But kama ulianza huko Mei, sasa unafaa utafute ile option ya kuingia kwa top 10, top 5, top 3. Yeah. That one, it has to be posted. It's a very nice class. I actually looked at some nice things there. So now that I don't have any pressure in terms of anything, we see whether Tuesday we can actually get back to what we did, especially topic number 7. I'm waiting for it in exams. This one here, of course, I've said it has to be there. Topic number 9, that is budgeting. It was not tested in a correct manner, so we are still expecting a huge question from it. Topic number 10, we don't even need to argue about it. Hiyo tunaingoja. Standard cost cut or variances. Standard cost cut or variances. Yeah, so I think you can at least now know where you are, and with the content which you are having, what you need to work on between now and when you'll be sitting for this paper is speed. Content uko nayo ya kutosha. It is now about speed. It's now about speed. Thanks for your time. Have a blessed night, and let's meet next week.